so that you are not getting into a problem. Is this better than the multiple filing which is happening now? I am filing under the 11 laws which I have. Of course, everybody is not filing 11 laws, most of us 3 or 4. But 11 laws are there theoretically for you to follow against one return. One means one return divided into 3 or 4. It certainly induces voluntary compliance, as I said, and certainly more revenue. But it's going to be a nightmare for the SME. I think the large people are simply going to buy the software or get their SAP, changed to ensure that they are not affected. Large people will not get affected by GST. In fact, they'll be very happy because SMEs are going to go out. Please understand, business opportunity. GST is a business opportunity for large people who are able to keep their accounts robust. It is also an opportunity for the SME because many SMEs are going to go. So if I have competitors who are in SME and their compliance levels are poorer, maybe I can take advantage of this. See that I am pakka. Anything to say? No. It is going to reduce the administrative cost of the government tremendously. Tremendous reduction in administrative cost of the regulator. But what about the compliance cost for the person who is there? Whatever I have told you, it may not apply to every SSC. There may be many SSCs who have a single place and single thing and very simple business, so it may not apply to them. Let's look at the charging section and then we'll look at what is the impact because this part of it was also mine. Remember, whatever we are doing is, number one, it's the model law. So there are lots of problems in it which we require to represent and get it corrected. And all of you here are welcome. Please tell me how many of you have visited the Indirect Tax Committee's website on ICAI? Very few. I would urge you to go there. You can get some more resources. You would be surprised on what all we have been doing in spite of being part of a voluntary group. Please do go there because you will get a lot of information. You will know what's happening. In fact, this course also, though we have not got the material ready, we have got 3 parts of this course, 1 day, 2 day, 3 day course. We have put the suggested subjects also. We also want to give standardized material for it as we had done in the past. You know, in 2010, when 9 or 10, 2010 when I came to the council, I was surprised that there were only some places in India indirect tax was being practiced and it was very less. Even in Delhi, it was a few people. We in Bangalore, we are all knowing each other by name. The number of people who were there were all known by name and they were all doing very small practice. And then, of course, in Mumbai, it was a little more. So in 2012, we took on the standardized booklets and enabling service tax. I think around 35,000 chartered accountants took that 1 day course, 2 day course, 3 day course, 4 day course. And after that, the number of chartered accountants in indirect tax blossomed. So we expect in GST also we'll do the same thing and see that we train at least in the awareness part. I want to cover at least 30 to 40,000 before the GST comes, which is 1st April. And maybe the workshop mode at least 7,500 people we want to cover. Anyway, that is aside. Why I am asking you all, telling you all this is please keep in touch with the site. You can download a lot of things which are useful. We are also trying to think of putting some articles and all that. Other resources also good. LinkedIn is there, CA Club is there, a lot of good articles come, you could look at that also. Anyway, the charging section, a very important section. So it says that there shall be a tax levied which will be called CGST, SGST or IGST. So CGST, SGST is for whatever services or goods I supply within the state. Supply is the word. I am going to look at supply definition a little later. That means even if I have a branch, now I have a Gurgaon branch, if I provide services to the Gurgaon branch, then I have to charge service tax from Bangalore. And if Gurgaon branch is taking some services from our Hyderabad branch, they will also give him. He will take credit of everything and then he will charge the client. Though we are all one entity only, we are all Hiregangi and Associates, still we'll have to do it. Now can you imagine how much problem this is going to create in service industry? Huge. And this is, if it is within the state, then you are going to charge this CGST. we expect the CGST rate to be little less than the SGST rate. So if we have, say, if we have a rate of 20%, then maybe 9% will be the CGST and 11% will be given for the SGST. The IGST, which is whenever I do the same transaction across the states, I'll have to pay IGST, and this is simply an integration of those two rates. Is the rate the same throughout India? No, it may not be the same, because states will be given a leeway to charge SGST, a little band, 1 or 2% band will be given to the states. So say I am sending to Hyderabad some goods from Gurgaon, then maybe Telangana has fixed a rate of 10% SGST. Then it will be 9 plus 10, 19. Whereas Kerala might keep 12 or 11. So then it will be 11 plus 9, 20. IGST rate itself will change depending on the state. So this is another problem, because your rate is not the same if you are dealing with different people. One invoice will be to one place, another invoice, the rate may be different, slightly, as far as the IGST is concerned. It's not that the IGST will be the same everywhere. Of course, the rates we do not know, they may be the same. If they are the same, nightmare less. If they are going to provide this leeway, we are going to have a problem. States are asking for the leeway of 2%. And this tax shall be paid by every taxable person. I think those parts of it are going to be discussed also. And another point which is very important is that just like service tax and in VAT you have something called a purchase tax. Various states call it various URD purchase tax they call it. So this particular philosophy is also borrowed into the GST law, rightly so. It should be there, because otherwise I would buy everything from an unregistered dealer. But now I won't buy from unregistered dealer because he is not effective. He has bought at 100 rupees material and he is selling me after adding 100 rupees. 200 rupee material is selling to me. He does not charge any VAT. But I don't get any credit at all. So my cost of goods is 200. Let me look at another dealer who is manufacturing or doing that same activity. The other dealer may be buying again at 100, but when he buys at 100, he would have got the tax credit difference from his suppliers, which will be 100 divided by whatever the rate, 20 divided by 120, maybe around 15 rupees less. So his cost is already 85. That 85 he may share with me because he wants to be competitive. So I will buy at a net cost of 185 instead of 200, and I will buy from the registered dealers only. So this is going to be a little problem, and therefore most dealers who are dealing with people who are going to buy goods from them and use it further or sell it further, consume it in the course of business, will all be interested in buying with GST. Nobody will buy from the unregistered dealer. Anyway, the reverse charge is going to be applicable. For example, service from outside India, maybe unorganized sector, they will still say that it will be under reverse charge. We don't know. We'll have to wait. This is again going to come from the council. You will find a lot of things are going to come from the council. Council is going to become a superpower in India, more powerful than any state. The GST council will be more powerful than any state. I hope it doesn't become more powerful than the center. I think this is all there. The last bit of the slide is the only thing which is additional. So where is it, what is going to be the rate? The location of the supplier and the place of supply are if it's in the same state, you don't have a problem as far as the rate is concerned. Location and of the supplier and the receiver in different states, then you have a problem of a rate. Supply is very important to understand, and what they have looked at is almost anything is a supply, almost anything. So finally, when we analyze this law, some of us may like to come to what is it that is not a supply is probably easier. After a lot of authors have started giving that list, we can put it together and keep one for our reference. We know this is not a supply, everything else is supply. But they have looked at, they have tried to cover as much as possible, as wide as possible they have tried to cover. And you find, sale, now supply is there, right? Sale also will be included. Barter, which was not there earlier. When there was an exchange, that was not there. Now even barter is there. Rest of it, of course, was there. License and rental, etc. was already there. The thing is, even if it is agreed, is going to be liable. This government is going from bad to worse as far as when they should collect the taxes. Any tax should be collected only when it is due. This is what Arthashastra said. Chanakya said that in Arthashastra. He said, don't pluck unripe fruits, it won't give you the effect. Which is true. You just think about it. And the government is trying to pluck unripe fruits. Very early they try to get the tax. Earliest point, let's get the tax. What are they? Are they businessmen? They are not. They should not do it. But anyway, they have taken it from the service tax law. Earlier, if I was a works contractor and I had got a mobilization advance, I was not liable to pay VAT on that mobilization advance till I started the activity, till that activity starts. Now, from the date of the agreement or the date of the advance, they are asking us to tax the supply, whether it is goods or services, which is, I think, again, it's going to come up for challenge. Because not fair. Hopefully, they will make this reasonable. We have also been putting, even today, I have uploaded one on this supply. Couple of articles I have put on the supply of goods and services. Maybe if you are interested, you can look at it in LinkedIn. For a consideration by a person in furtherance of business. But does it mean that if there is no consideration, there is no tax? Sorry, even that is available. We'll go further. The last bit, if you see in this, on the right hand side, is they have made a schedule where with or without consideration, all these activities will be liable. So therefore, there is going to be a deemed tax on you, and it can create problem in a non-business type of activity. It will create a problem of compliance and impossibility, because I might like to give the service free to you, but if I have to pay the service tax and give you free service, maybe it's a little challenging. You just think, many times we as chartered accountants, we give free service for many people. Maybe we give it because out of thoughts of charity, that guy is doing a good job. So we say, okay, he's going through a bad time. So we keep that aside, ठीक है, 2 साल के बाद ठीक करेगा, then I will charge him. You tell him also, I will not charge you for this 1 year. After that, anyway, you are my old time client. I will add this fee and charge you once you do well. And he will be very happy that you are considerate and you are giving him the service. All this in this tax may not be possible, because you will have to pay the tax and then only do anything you want to do with them. In importation of services, clearly they say, whether or not for consideration. So if you are importing goods or services, you pay the tax. Even if you are importing some samples given by the customer free of cost, you have to pay your GST. Earlier this was not there. Unless money consideration was there, in VAT there was no liability at all. What are those without consideration? These are all taken from the service tax partially, and those which were exceptions in VAT. So you find wherever there were temporary transfer of business, in most of the VAT laws there was an exemption available, and the same exemption was available in service tax also in the mega exemption. Now they say that could be taxable. Now we don't know how much they are going to tax, whether they are going to tax. So temporary application of business assets to private or business use. If you look at excise, as far as the capital goods are concerned, you only require to use the capital goods partially for providing services such that is used in manufacture of dutiable goods. So if, or in service tax, if I am using it for one service activity which is taxable, then I am eligible for 100%. For example, I am making roads which are exempted. I am also making government buildings. Government buildings are not liable, but roads are not liable. And for both these, I require excavator. So though I use the excavator for roads also, I will still get 100% credit, which was a correct understanding. Now they are restricting this. They could use some pro rata basis. They could say that whatever is used for personal use, anyway we are following that in our income tax. For your company law, all personal expenses are disallowed, they are all kept out. Same way they could have followed, but unfortunately indirect tax law has its own rules and they don't want to talk to the income tax. So these are all issues which are coming. If you look at many of them, you will remember income tax. Many of these things on the right hand side, you will remember income tax. What is Schedule 2? You find transfer of title in goods. Why have they made this schedule? To remove anomalies, to remove issues. Because earlier we were thinking, VAT authorities used to say these are goods liable to VAT, and service tax authorities used to say this is a service and it is eligible for, liable for service tax. So this particular schedule gives you what is what. So if you are doing transfer of title in goods, like today, if I give you a concrete mixer, on hire for 3 months, I am charging VAT because I am giving you control and possession. I charge VAT. Whereas if I give you an excavator along with my person, even though I charge you on monthly basis, it is liable to service tax because I don't give you control and possession. These type of controversies they want to avoid. Any transfer of title, it will be a supply of goods. Transfers without transfer of title. If I don't give it, supply of services of goods, rights in goods, undivided share in goods. This is something which has bring some clarity. I think the other part of it, lease, tenancy, easements and all were anyway liable to service tax, but there were some disputes. They are trying to put an end to that. And any processing will relate to supply of goods only. So these particular slides are only to remove some anomalies which earlier you might have thought are either you thought it is goods or services, but there was a lot of dispute. Now why was this required at all? Probably this is required because there may be a different rate, I don't know, a merit rate given for services, hopefully. Actually they should. You just look at service and look at goods. A trader buys goods at 100 rupees and he sells normally for 105. 5% maybe his margin. And he pays VAT only on 5%. Whereas you and me, what is the credit we get for our services? Nothing. Very few. Computers. How many of you take computer credits in this room? It's eligible. Everything is excisable. See, not even one hand has risen. And all of us use computers, but we don't take the central excise duty credit. Not even 1% in this room. And it's available for the last 12 years, or 10 years at least. Last 10 years is available to us, but not even 1% in this room has taken credit. Are we taking credit for furniture? Is it not used for my practice? Does it not suffer excise? But we don't. Maybe it is smaller and it's once in a way. What about inputs? We use paper. Once we had a client who was doing coaching, and these coaching classes and all, the turnover is huge. But they also have huge paper cost. So the question was that how can you plan for these people anything? So we said take the credit of paper. At that time service tax was 8% and excise was 16%. So it was a big bonanza for that client. He could take credit of the paper and printing inks all at 16% and his service was being provided at 8%. But as far as we are concerned, we hardly take credit, small amount, maybe telephone credit and maybe other professionals credit, that's it. So that's why they have looked to show this difference. In case there is a variation, then this will be important. Otherwise, understanding which rule to apply, because supply of goods, different rules, supply of services, different rules. So which rule are you going to apply to find out where the service is or where the goods are? If you want to apply those rules, you will have to come to know whether it is goods or service, and that's why this particular clarificatory schedule has been given. So they have deemed certain things to be supply of services, and most of them were already known by us, or they were declared in the declared list of services as something liable to service tax. Now they made it clear. So these transactions, VAT will not come at all. VAT authorities will not come. As far as we are concerned, as people who are looking at GST, we will only apply the rules which are applicable for services. Let me go little further. 11 taxes totally have been subsumed, and you have in the central taxes you have excise, additional duty of excise not applicable to all products, some products. Again, excise duty on medicinal and toiletries not applicable to all products, some products. Additional duties of customs, when I import goods, I pay that, and that is also subsumed. service tax, surcharges, cesses. And on the state side, you find VAT, sales tax, purchase tax, entertainment tax, luxury tax, entry tax, and taxes on various other activities like lottery, betting, gambling. All this is going to become CGST, SGST, IGST, depending. Of course, this IGST is depending on whether it's interstate. What are the major concerns? I am very concerned because I think when we are trying to bring in a law like this, major concern I have is that the states have not agreed to petroleum products being bought in, and they account for 35% of the revenue of the VAT department. 6 lakh crores, if I were to assume, is the total amount. 35% of that 2 lakh crores is going to be cascading. We should not have cascaded, because GST is meant for taxes not to cascade, so that it becomes very efficient, and the trade and everybody else will have to embrace it. They'll have to run towards it. But with this type of carve-outs, they may not find it so enticing. I have no issues with liquor and all. I don't think credit will be available on this anyway. Purchase tax, stamp duty. In the starting of this whole exercise, they were talking about subsuming corporate tax, corporate income tax into GST. They were thinking of subsuming stamp duty. Why? These are all related to business. Other than the personal part, then they could have made personal part little lesser rates, and everything else which is related to business would come and get subsumed into GST. Now it's not there. Vehicle tax. I don't understand. There is some problem with the department. Yeah, I remember